All right, let's go right to the daily chart. And we can see on Tuesday, we had a huge spike in price. To my surprise, actually. So, what was all the fuss in the price moving higher? Let's get into the article that explains a bit. This is coming from Investor Place. Why is Mullen Automotive stock up 25%? So the stock surged higher 25% on no immediate company specific news. Yesterday, the EV company disclosed new court provided deadlines in its lawsuit against several broker dealers for alleged market manipulation of Mullen stock. Mullen now has until November 30th to file an updated complaint, while the parties involved in the complaint have until December 15th to jointly file their case management plan. So Mullen's lawsuit against broker dealers was that they were helping, just say the short sellers, crash the stock, after their reverse stock splits, in a means to prevent them from compliance with Nasdaq of maintaining that dollar value in their shares. This news alone does not seem to explain the jump in Mullen's stock. First, the jump could be attributed to an oversold bounce. Now, again, Mullen stock has just been declining, declining, and declining. Even the reverse stock splits could not hold up the stock price. That was actually the opportunity to short the stock. Shares of the company are trading well below the Nasdaq minimum bid price required of $1, and a reverse split could bring shares back into compliance. Mullen noted that it would only enact a reverse split if its shares could not reach the dollar organically. Now, the combined reverse splits are something like 1 to 250. In a year, you could only do but so many reverse splits. So I don't know if Mullen can do another reverse split to get their stock above $1. A short squeeze could also be the culprit from yesterday's gains. Now, Mullen carries a short interest of roughly 20% of the float, or roughly 36 million shares, valued at 16.5 million. Generally, a short interest above 10 is considered high, while a short interest above 20 is considered very high. Now, what is it costing those short sellers to short the stock? You have this thing called a stock cost to borrow fee. Provides investors with hints about possible short squeezes. The fee represents the annual amount that short sellers must pay to borrow the stock. Currently, Mullen carries a CTB fee of about 10%, which is above the average of between 0.3 and 3%. So that's an indicator to tell whether you might get a short squeeze of a stock in the future. Finally, some investors on social media are speculating that Mullen has received another compliance extension from Nasdaq. However, that's not the case. So nevertheless, going back to the daily chart, again, in my opinion, no, the stock didn't bump high enough in order for it to be a shorting opportunity. You can see today now we have a gap down. So this is a gap and go. Price opened lower, went up to fill any remaining sell orders, and now is going lower. So this is a gap and go. Gap meaning you closed yesterday at 30 cents. You opened today at 28 cents. Really, the level to short is this 40-cent level. That's where it was previous support, now becomes resistance. Again, if you think price is forming a bottom, I don't think that's going to be the case. I do think we're going to see lower lows because I think Mullen cannot initiate another reverse stock split, and that's going to prevent them from being in compliance with the Nasdaq, which means that their stock will eventually be bought and sold over the OTC market, which is going to be very illiquid, which is going to prevent them from raising capital, which is going to put their operations in jeopardy. Thanks for watching. Subscribe. Please like the video.